be a quick little, market-wide recap for what's occurred this week. The last time I posted something was, let's check out, the 21st, or no, the 17th, so on Saturday, or Sunday. And, I mean, the whole concept of my thesis was that I think we're developing a top on the broader equity market for the next few months, potentially few years. Although I don't like to really speculate about that far ahead. But that when this window opens up post-August expiration on the 15th, of expiration on the 20th, and we have this summer of George ending, and we're entering a period of seasonality where markets kind of tend to underperform, especially after how this happened with this aggressive melt up due to the Mana Charm flows that play a pivotal role within the summer. And then just due to the sequence that happened in April as well and how it developed, I'm not really surprised that this happened. And then more that this range built out into this mid-quarter three kind of window really, really gives me a lot of confidence and confluence and conviction on that short, right? So we have this distributive range above the 613 highs from February of expiration, where we begin to develop a range post July 3rd kind of interim top. We put in a range here that starts to get distributed, but we didn't really have any clear structure yet or an aggressive footprint, right? We had this CPI failure on the 15th, and then the massive volume wicking us on the 15th, the continued rally into these earnings reports on the 31st, catalyzing a 3% move into the August flows and a 50% move on VIX as well, which is really, really insane, right? And then we get the INWOG on the 4th, the float up into this expiration where we just continue to see that exhaustive kind of look. And then we get the breakdown this week, right? We get a massive sell-off off of RIP yesterday. This time, a lot of volume backing at the highest since April 9th, higher than the July 16th wick. But this time it happens on the sell-off, right? This time it happens on open, on the sell-off. We see a weak bid and a digestion of that range. And it's not the same as this back here because this is on a wick. This is a bid taking out of multiple weekly lows. And this is a completely different scenario here in my opinion. But now what we have with the added conviction of a lot of these leaders failing as well and a lot of tech equity beginning to look very, very poor and seeing aggressive breakdowns off the highs and a lot of risk off and lower beta names kind of getting that bid like energy and consumer staples. We have a lot of conviction short side, right? And I said, it's all about that window. My window into September is going to be, I think we retest these highs. From February, my window in Q3 is I think we revisit 600 to 580 to 564, and to Q4 where we could potentially put in a lower high. And that still completely stands. There's not a clear structure in terms of getting aggressive yet. I do think that there's a lot of vulnerability here for the September positioning to revisit this INWOG and revisit these highs, potentially taking out these lows from the week of the 28th. And then the January positioning as well that stems into kind of my quarter four conviction. And into Q1 of next year. But just a quick one to kind of talk about what's happening, right? And why, we had a 1.3% session and then a massive breakdown and these hammer candles that don't really have a lot of structure behind them. It's more of an aggressive sell-off, a buyer at some important spots. Like here's the August 4th gap at 560.59. On Qs, there's a lot of volume backing this print, but we're kind of failing a pivotal point within the 565 gap from the first. So I think that this is still completely vulnerable, especially if you take this position on September expiration with the conviction and the idea that you're going to hold this until after August opex and expiration, because that's when the window kind of opens for the aggressiveness short side. And we have the same kind of thing here on QQQ, a little bit more of an extensive move. We haven't seen financials start to get hit yet. I think that's going to happen, and I think that's going to really set a lot of things off. But right now, it's kind of the semiconductors and tech equity, specifically like the Mag 7 and the Palantirs and the Hoods and a lot of those names that are really, really getting slammed. And I'm just not surprised. Right? I'm really, really not surprised. I'm not surprised at how this is developing and why and when. And I think that we can revisit these INWOGs early next week into this end of next. Like if we get a little bit of a move through 560, this pushes 554, right? And same with SPY kind of under 632 to 626, right? But I think, when you focus on options positioning, the Januaries and Septembers are still completely viable, targeting this gap and then targeting those highs and then rolling it on a last point of supply in terms of like a daily perspective. I think that this is an hourly distribution, and we're probably putting in our LPSY right here. And we should take out these lows and revisit 613 within the month, probably next week, if I'm being completely honest. I know that that's a little aggressive, but the way that these happen, like when you look at February and how easy this move was, right, from February 20th to early March, right, we declined 7%. This happened so easy. And I think as well the September flows can 100% get shut down if this really starts to get aggressive. So that's a big focus of mine, the semiconductor space. I do think that this is a distribution. I think we've been seeing a lot of aggressiveness behind the seller at these highs, and we've just continued to see that kind of demand off of 283 get exhausted on 1, 2, 3, 4, 5, 6, 7 daily tests, with the progression just really, really stalling and building out a distributive range. And we kind of see this wick, but this is not a good looking candle, especially when you break it down on an hourly perspective. And I think the slippage through 283 is really going to propel this down to the 260s. And so this is 100% a big focus of mine, as well as when you look at a lot of semiconductor names, they just look really weak, right? We have TSM about to slip back into the range that we had, the highs that we had put in January. This was a very gross range where the highest volume came on a gap up off the report that did not see a structurally sound good continuation. Continue to see a larger seller at these ranges with a lot of these gaps being faded, and then a really easy move to potentially crack us back underneath these highs. I don't like Qualcomm. This has been a really notable underperformer, especially compared to like the MUs and lame researches where these took out the $72 lows and the $85 lows. That massive capitulation reverted into the gaps above on these kind of accumulative charts. Qualcomm really failed to do so, right? We had put this floor in on August 5th that we swept in December and then saw that capitulation. Didn't ever get the move on this name, right? We didn't ever see, like, we broke down off the report, we saw a rally, and then we broke down off this report. We never really see a clean structure and more or less a buyer and then a redistribution in the like lower high range of this sequence, right? So this is not really an appealing chart. At all. The only semiconductor that's super appealing to me is Intel, but this is one that a long-term commons position is completely viable. I would really need to see a little bit of a cleaner structure to get aggressive options, especially in the environment I think we're going to develop. This is a like good-looking weekly accumulation. We see the first initial low put in 2024, that summer, that Q2. We see a clean little leg, a massive sell-off off the report. We take out those lows once, twice, and we're seeing historic volume, the highest in like 2 decades, put in down here, and a really notable underperformer, not only since 2023, but since 2021. I mean, this has just been beaten down, and I do think that this can outperform. I do think that there's a lot of macro perspective that probably has a good outlook on this name. What I would just look for is that coiling action under 2643, the November highs for move to 29. I mean, this is a really notable anomaly candle off of the report. Like, that's not a surprise. And then we see the clean kind of structure develop and a really aggressive parabolic rally that's put in. So this is a clean looking chart. Commons are a good focus of mine if for a long-term perspective. I don't see a trade that's setting up quite yet. I mean, if some commons with like a 70-cent risk for a $5 to $10, $9 reward is not bad. But I don't know how aggressive I can get, especially with just how parabolic this kind of moves. We saw this before in February where we put in this massive rally and then that influx of volume, and then this really didn't go anywhere. So I'd personally rather like to see something a little bit more appealing. There's a lot of volume on this print that we put in on Tuesday, and even on Friday. So I don't know. I rather would take this a little bit patiently and see how the weekly print develops. But even getting into financials, this doesn't look good, but we don't have a clear picture yet. The floor being put in at 51.32 is notable. This is too deep to be a discounted lower high, but it's like we haven't taken out the highs for a third high within this range yet. So I'd rather wait for that personally. A lot of these names, I mean, like the JPMs were within this gap from the first, but and like the Schwab or Goldman Sachs, this looks really, really bad on multiple time frames, building out a daily range. The Schwab potential path to least resistance and the earnings gap fill. I think Visa probably reverts into this March or June gap. MasterCard failing this gap that we put in June. I mean, a lot of these don't look good, but I just don't. There's not a clean edge quite yet for me to execute on it. So I don't have anything on financials. My thesis kind of stays the same. 3 higher high distribution on a weekly perspective developing in Q2 of last year, and then a daily distribution developing to revert this to like 47 by end of year, but we don't have a clear picture yet. The one sector that looks phenomenal is energy. Very, very coiled and very, very notable underperformer with in relative to where we are at in comparison to like the broader equity market from those April gaps. We've yet to fill them. We see the seller within this 89.65 range, but this kind of consolidation and coiling action with the lack of highs being kind of sold off and the notable bidding at the lows and protection of bull gaps that have a lot of intent behind them is really pivotal. I really like ZOM. We're in that golden pocket range. We're defending the gaps. We take out these lows. We have a massive capitulation that sparks a reversal. Take out those lows off of the report, and we put in an anomaly candle. And then like this hourly accumulative range building out to prop us up to 110. This is a really good looking chart, and I think this is a really good looking commons trade from a $2 range to 115 to 119. I think this is a good options trade back to 110, and then we can potentially look for something to roll to 112 to 115 into September. But this is a really good looking chart and a really easy moving name, in my opinion. I've talked about this a lot. This is one of my main long side focuses for the reversion into the full gap fill. CVX staying pretty coiled within this gap, but Oxy as well. But none of these really have the best look when I think about the lows being taken out like we have on ZOM, right? And I talked about the outperformance of VLO and MPC and PSX earlier in the year. VLO was a really clean trade in May and June. And so is energy as a whole off these lows, not this higher low that we put in on VLO, but ZOM right now is a name that is really piquing my interest, and I've really been keen on developing a position on it within this range that we've put in since the beginning of August following the report, and then this August 5th kind of anomaly candle. And then the options opportunity kind of setting up once again with that expiration window post opex. There's just so much relevance behind the expirations, and why we see that gamma, those flows unwind, the volatility return, and be free to move, and all of this that just holds a lot of relevance to the movement of the broader equity market. And then we see the positioning unwind for certain assets and sectors, and it kind of just like leads to that rotation, right? It's hard to not hard to explain, but it's something that you have to pick up and develop over just years of experience, and it's something that I'm still definitely learning, but that I'm noticing more and more. And I would like to say as well, if energy fails, for some reason, I think we take out these lows, pull back to 72, fill the full October 2022 INWOG, because this was a notable anomaly on XLE and on a lot of these energy names. If energy fails, if we don't revert to this gap, I'm thinking 72 to 94 is going to be the trade next year. That's just me personally, right? MAG's looking very gross, down 3.4% on the week after this massive, notable wick. We see the continued rally and the notable exhaustion on a weekly and daily perspective. It's just not surprising. And now we're pinned under these December highs. But, I mean, this is just a kind of individual thing that I like to look at overall, right? We have energy XLP. I mean, this had a really clean pop Tuesday, Wednesday. And then we kind of get the gap down. I think it's off the Walmart report. But either way, I mean, this is a really constructive coiled chart that has a lot of room to run and put in some really notable outperforming session prints this week in comparison to tech equity. Tuesday and Wednesday print down 1.75, down 0.7. This was up 1%. This was up 0.57%. All happening after 2 weeks ago, a 3% week. So it's just not a surprise, right? It's really not. Get the Bitcoin. This doesn't look good. And then we get to just the individual Mag 7 names. I mean, we have NVIDIA earnings next week. That's going to be a big time thing, in my opinion, to keep a watch. But this weekly chart is hideous. And then we finally see the seller, but we have to remember that this is an auction. This is going to need time. Hands are going to need to change, and that's exactly what we get. We get the inside session. We get the failure and anomaly print last week. We build out this hourly range at 184, 183 to 184, and then we finally get a massive, massive move. I mean, this move, the 31st and the 1st was 7%. Here, this week, we see another 7.5% decline like that. And a really notable lack of a structurally sound bid. We just have to get that slippage beneath 174. I think this revisits 164 with ease. If you just look at where the volume comes in at, you look at the lack of a clean structure and the gap left below, it's very, very appealing short side. And I do think that this is going to revert into the lower $100 this year. I think we're going to get a 30% decline from August highs to the end of 2025 on NVIDIA, and I stand by that. And it's going to be the same thing with Meta. We get this exhaustion off the report. We get the draw in the NWAG. We get the failed breakout. We get the 7% decline on a break, 8% decline in a week. And once we get that slippage underneath where that initial buy climax was put in, that sparked a move from 741 to 481 in just a couple of months. I think this reverts into the 600 range by the end of the year. And I do think that this revisits 384, but that's a speculative idea. We have, what else? Amazon filling the peg, seeing the immediate reversal off of that. Google filling the 206 peg, we see the immediate reversal off of that. Microsoft down 8% from the highs of the report on the 31st. Apple, we get this aggressive fake out off the report, the massive absorption of supply off of the 214 range, and then we rally and we put in this very, very notable exhaustion, and we're now down 3 or 4% from these highs of this range. And this can still really be a weekly sweep here, right, where we have that influx of volume, we get everybody bared up, change hands, wipe this out, offload their inventory, and then a lot of those late bids are trapped. I don't have a structure there yet. AMD looks abysmal as well. This is hideous. I mean, I'm sorry, but look at this print the week of the 4th. This is not a bullish candle when you understand the structure and the volume and where this comes in at. We then fade the highs next the following week on a massive influx of volume to kind of build out this notable distribution here. And then we get this decline of, 15% in just like 6 trading sessions. It's just easy, like butter. And the fact that we fail to take out this low or this low really gives me a lot of conviction that this is going to revisit, 140 to 146 to 130 end of year. I don't have a personal kind of edge quite yet, but this is a really gross one in my opinion. And there's a lot of red flags on an outperformer like this. The only chart that doesn't look bad is Tesla. I think that this is a commons trade. I think this was a great commons trade in June. I think this was a great leveraged commons trade and options trade into that pop on the 23rd of June. But we get that failed breakout. We do continue to see some sell climaxes and some exhaustion from those sellers on these kind of delivery numbers, that earnings report. I don't have an options edge here yet, but this is a very coiled chart, and we could potentially be putting in a higher low here. I do think this can revert to 390 to 400 this year. I think this can be an outperformer, but as far as right now, this is just a commons focus of mine. Nothing leveraged yet. Lyft actually looks really, really good. I talked about this on Sunday. I don't really have an edge here unless this is a higher time frame commons position in like that 13 range. That 13 range to the 17 to 20. First Solar was really, really clean, but that's my target at 216 is hit. Palantir, I talked about this, the same exact thing. This is probably the last thing I'm going to talk about on this video. It's the same exact thing. We see the February gap up off the report. We see everybody get bowled up on a name that within that point was already going up 1,000+%. We see the continuation. We have to see how that auction feels. We get a massive 50% decline into April. We rally again. We see the preliminary signs of distribution. We see an exhaustive gap off the report. Everybody gets bowled up. A phenomenal quarter overall, most likely. I don't really know. And we see the exhaustion, and now we've, from peak to trough, declined 25%. And we put in this very, very similar hammer candle where we declined 25% from peak to trough here, and then we continue to decline. And you look at just how this is developing, it's disgusting. That hourly look is disgusting. And honestly, this was a phenomenal short. Is there a Palantir short ETF? There is, actually. This is a phenomenal short. This is a phenomenal opportunity to notably see the exhaustion into the post-August expiration window and capitalize on an absolutely disgusting bleed through the earnings gap. That is a terrible sign. There's usually on these gaps a buyer that defends the progression that they made that move with a lot of intent, and at least sees a decent little leg off of a sweep of the peg. Absolutely nothing happened this time. 25% decline from 190 to 145 in just like a week on Palantir. I'm going to put it in an absolutely disgusting weekly candle. I think this reverts to 90, sub $100 within a year. I think that's going to be shallow on a long-term perspective, and this is going to trade to 45. I mean, honestly, the short trade is probably right here. Shorting this on September expiration, targeting back down to these lows and potentially even to 125 within the month into September is not a bad idea. Obviously, it's easy to spot the exhaustion, the volume divergence developing up here, and then we just get the clean, easy move like butter. It's phenomenal. I mean, and it's the same thing over and over again on different names at different price points at different times. Nothing fucking changes. Absolutely nothing changes. This is the same exact thing that developed in February on Palantir post earnings report. It's the exact same thing. Only this time, it has a lot more conviction behind more than a 50% cut in the price of Palantir. This time, we have a lot of conviction behind this revisiting not only 63, but 45, 42. That's going to be next year, though, in my opinion. But this is not surprising. This name has rallied 3,000% off of 2022 lows, and you still have people buying off of a gap up off the earnings report. You don't understand the sheer risk to reward. I mean, if in investing perspective, sure. But as far as a trading perspective on Palantir goes, there's not been a single opportunity to buy that I'm very fond of, even in April, even in January, even here. This is the worst. If you buy this candle, that's absolutely hideous. I know that fucking guy, Amit, that buys up Palantir every time it's down 5%. It's about to get fucking destroyed. Because this is just in my opinion, just a terrible time to be long Palantir. There is not an edge here long side, and there is an edge short. Honestly, there's an edge short right here. If you want to take this short right here, there is an edge short side to revisit 125 on like September or October expiration. There was an edge short side up here. I mean, it's difficult to have an objective risk, but it's one of those things where you know when you're wrong, and we enter this window and we just absolutely get demolished into the gap, and you can cover that position and potentially re-roll it. I mean, it is not surprising, and I just wanted to talk about how clean this move was, how easy this 25% decline in Palantir happening from August 12th to August 20th was, and why it happened so easily, and why I'm not surprised. And the execution on this would really be a timing thing, buying a lot of time and understanding that the timing for this short to happen is going to be within this window post-expiration, post-expiration, and why it's not surprising that we see that decline on Palantir, and why this is a terrible, terrible look for the equity market on just an outperformer overall. I mean, 100% green on the year. Up, like I said, 3,000% from the lows of 2022. This is an outperforming equity, and seeing it decline 25% in a week from an all-time high push off the report is a terrible look for the financial markets. We have Hood looking terrible as well. The same exact thing. The all-time high breakout up from $7 to 100, even less than $7 if I'm not mistaken. $6 to 120, and then just continuing to build at this exhaustive range. And then you look at PEP, and you look at how fucking clean PEP looks. I mean, it's not a surprise. Palantir short is just so clean, and this was a perfectly good opportunity to execute on some commons as far as leveraged inverse ETFs and options positioning. If you want to take some Octobers and cover this into the earnings report gap, I'm sure those ran multiple 100%. And then if you want to take some options looking for 145 and looking for 125, I mean, it's phenomenal. I think this is going to be a clean short to set up on a lower high. I'm not a big fan of trying to time the top. I think that, that's a really notably speculative trade. But, when you look at over here, it's hard to execute. This did mark the top of the equity market on February of expiration, so I'm not surprised. We get the fake out hammer candle, um, and then kind of the gap up, exhaustive reversal in the gap and continuation next week. So if you really want to short this, I don't think that this is bad, but you see how we kind of put in like here, we put that in on like an internal lower high, we fill this gap, we see some hourly climaxes rally, and then we have an opportunity to really, really like cleanly short this with like a notable objective risk as far as like a gap and a peg. So if we can see this reversion to like 125 and then maybe we revert to like 160, that can be a more objectively clean short for someone, but an hourly positioning here is not bad. I just wanted to come talk about this. Come talk about how fucking clean the short side looks, not only on a monthly perspective or a quarterly perspective, but also on a multi-year perspective. I think we raise it 440 into 2028, but that's a lot of speculation.